Robert, of course, the big story today is the December jobs report, and you are calling this a whale of a jobs report. Can you expand on that?
Yes, the whale surfaced. We had 312,000 net new jobs added in the month of December, well above consensus expectations. And it really confirms the strong private sector ADP report we got for the month also. So it's two strong jobs reports for December.
Robert, Apple made news this week discussing the slowdown in China and how it's going to affect their sales. Can you tell us more about that?
Yeah, so China economy definitely looks like it's being impacted by the trade wars with the U.S. The manufacturing sector is cooling. It's not in hard contraction, but it's not growing. Their manufacturing indexes are pretty much at the break-even point right now. Consumer-related metrics are also cooling down. They're not contracting, but they're not growing as fast either. So China is definitely taking a downshift here at year end, and it's as big as the U.S. economy. Certainly will have a major impact on other Asian economies, and certainly having an impact on global financial markets as well.
Let's move on to the government shutdown. We've been in it for 2 weeks now. What are your thoughts if this continues?
Well, so far the shutdown has been inconsequential to most everyone except the 300,000 to 400,000 federal government workers who are on an unpaid holiday right now. They most likely, the vast majority of them will get their pay. We'll start to see more drag from this as time, if it goes on. We'll start to see permits not being approved, paperwork not being moved, and we will also see a big hit on January employment data if the government shutdown extends through next week, because next week is the week of the month when the payroll employment data is collected, and that could show a big drag on the government side, which is big enough to show up on the total as well. So January employment numbers could be soft due to this anomalous event.
And moving on to manufacturing, we did see a drop in December, but you say it's still positive?
Yes, the ISM Purchasing Managers Index for the manufacturing sector did cool somewhat, down to about 54.5 or so. Still on the positive side, but certainly below the very strong readings we were seeing at the end of last summer, about 60. So it's anything above 50 is good. So the manufacturing sector is still expanding, but certainly not at the rate it was late last summer.
Okay, moving on to the next Fed meeting that's happening soon. What do you think will be the focus there?
Yep, lots going on in the world this week. The Fed's going to have a meeting at the end of the month. We actually saw Jay Powell, current chair of the Fed, and Janet Yellen and Ben Bernanke all sit down and have a panel discussion that was televised. Lots of good information coming there. So my expectation for the Fed is they sit on their hands at the end of this month and don't do anything to monetary policy. And we're going to be reading the meeting statement and the post-meeting press conference very carefully to see if the Fed tips their hand for their March meeting. They could tighten rates in March. I don't think they're going to be in a hurry to do that. If we get more positive economic data, it tends to say, yes, they'll go ahead and raise rates in March. But if we get sort of neutral or even gloomy economic data again, they could sit on their hands again. So the Fed's not going to be in a big hurry to raise rates, and that's why we're seeing, positive response to financial markets.